Welcome back to the conference. My name is Ari Burstein. I'm President of Capital Market Strategies. And on this panel, we're going to explore a little bit about ETFs and crypto ETFs in particular, and maybe some of the challenges to bringing this to fruition, particularly in several jurisdictions, which we will get to in a minute. We're going to jump right into the topics, but just before we do that, just want to introduce the fellow panelists up here with me. Jeff Bandman, founder and principal of Bandman Advisors. Elliot Johnson, Chief Investment Officer and Chief Operating Officer at EvolveETFs. Alex Tapscott, Managing Director, Digital Asset Group at Ninepoint Partners. And last but not least, Chris Zuehlke, Partner and Global Head of Cumberland at DRW. So I thought we'd spend some time setting the scene a bit. I think everybody listening in knows about ETFs in general, the structure, how they operate, but want to take a little bit of a deeper dive into crypto ETFs and maybe some of the differences and nuances around the product. So Elliot, maybe I'll start off with you. Again, maybe just to set the scene a bit, can you discuss how a crypto ETF is structured? More importantly, what are some of the underlying assets? Is the creation redemption process different than, let's call it, the traditional ETF?
Yeah, sure. Thanks, Ari. So an ETF is just an exchange of traded mutual fund by legal structure and by functional structure. And crypto ETFs are exactly the same as any other ETF. This is a regulated mutual fund that trades on the stock exchange. Here in Canada, it trades on the Toronto Stock Exchange. And so the way an ETF operates through the creation and redemption function is to provide as many units as investors require, to grow to the size that investors want, or to shrink when investors are selling their units back. And that ability to grow and shrink is what keeps the ETF in line with its reference asset. So there are a few differences with crypto ETFs to, say, an equity ETF, in the sense that we are not currently facilitating in-kind creations and redemptions. So a dealer can't bring Bitcoin or Ether to the ETF and exchange that for units. The creation and redemption mechanism is done in cash. Part of that is, I think, initially some concerns around the regulators as to how that might work, but also just really the plumbing. You know, the ETF is sitting on top of decades of legacy finance plumbing that still is in the process of being modernized to accept cryptocurrencies. So, you know, an ETF obviously has all the advantages of being held in a broker account for investors to use alongside the rest of their portfolio. And I think all of the crypto ETFs that have come to market in Canada this year have really been striving to make sure that the assets that they hold are in physical cryptocurrencies, so that the fund price performance is tracking the price performance of those cryptocurrencies. And so the way I think of crypto ETFs is with the analogy to ETFs that hold physical gold or physical silver. It's essentially the same thing. You've got market makers who are creating or redeeming in cash, and then the issuer is going out and making sure that the fund itself is holding gold or silver, and in the case of crypto ETFs, Bitcoin and Ether at the moment. And so, you know, I think for the message to the end user is really one of ETFs that hold cryptocurrencies are the same as holding those cryptocurrencies, but this is a facilitation for you. We really look at this in crypto terminology as a fiat on-ramp for investors to get assets that they otherwise wouldn't want to wire to an exchange and have those invested in cryptocurrencies.
So Alex, we're going to get into some of the challenges that come out of this a little bit later, but sticking maybe with crypto ETF 101, I mean, any other differences between an equity ETF or a fixed income ETF and the way you operate with kind of the market makers or folks making liquidity in the product?
Well, Elliot provided basically a masterclass definition technically of how they're almost identical, though there is an obvious difference, which is that Bitcoin and other crypto assets are a brand new, relatively new asset class. And so where we stand today, where we have a global recognized stock exchange in the TSX, an OSC, a regulator in the OSC that's very knowledgeable, counterparties, market makers, and so forth, certainly is a relatively new phenomenon. There was really a long process of education that went into it. So you don't typically need to educate the regulator on what a stock or a bond is, right? Or the exchange or your counterparties or vendors. But in this case, there was a great deal of education. And I think it's a real testament to the ETF operators in Canada. There's one in particular, which isn't Elliot's or my company, that fought a very long, drawn-out battle to get us to where we are today. And I'm very pleased with this situation and where it stands. As a Canadian, I'm glad that we're a first mover in this market. To my knowledge, there are no other ETFs in other markets. There are exchange-traded products and trusts and so forth. But a vehicle with the specific characteristics of an ETF is unique to the Canadian market. And I think that's important because it's offered investors a solution which they wouldn't otherwise have. But B, it's demonstrated to other regulators that this is something that can work, that you can have a daily creation and redemption process for units, that the underlying market is sufficiently liquid, that there are counterparties that have enough expertise and bandwidth to do this, and that you can have a vehicle which, even in a correction, which we've experienced, can maintain its peg plus or minus a few basis points to the underlying net asset value of the underlying asset. So I think that's a really great thing. And I hope that Canada can be a shining example of how other jurisdictions can follow suit.
Yeah, and I want to circle back, Alex, with you and Elliot in a minute on some of your experience with the regulators. But Chris or Jeff, before we kind of move on to some of the specifics, any other thoughts on some of the distinctions between a crypto ETF and maybe some of the ETFs that most of the folks listening are more familiar with?
One differentiation, that people talk about the term crypto ETF, but there's actually a couple of different flavors. And again, this has parallels to quite a number of other markets where these things trade safely and uneventfully, and the market is familiar with them. So you can have an ETF that as Elliot in his masterclass alluded to, and Alex was talking about as well, where kind of the holding by the ETF is in the quote physical. Obviously, these are intangible, but are in the physical commodity. So that's one type of ETF. A second type is an ETF that holds futures or derivatives that are based on that. And so you also could have an ETF that holds, say, Bitcoin futures or Ether futures, which in the U.S. are listed on a number of exchanges and are regulated by the CFTC. You have a bit of a kind of, I'd say, regulatory curiosity in that the futures and futures markets are regulated by the CFTC, my alma mater, but the ETF based on futures is regulated by the SEC. Right now, none of those have been brought to market yet, but obviously there's been a lot of work by a lot of participants in the industry to promote that. And then I would say there's one further thing which I think is technologically possible, but is probably not going to be the first thing that happens, which is that instead of people being able to own these ETFs, kind of in their brokerage account, it's actually conceivable, and I've worked with issuers who are exploring, could the ETF unit itself be held as itself a digital asset that you hold in a digital wallet? So, I think all of these things, will be part of the future, and perhaps Canada as the first mover will get to those sooner. But there are a few other categories, though I suspect most of our dialogue today will be around just the garden variety vanilla crypto ETF that holds the physical asset.
Right.
And if you don't mind me chiming in, I might kind of make it clear that I'm talking about this from a market participant perspective, but I think it's important to note the difference between cash creates and in-kind creates. Kind of going back to what Elliot mentioned previously, you're working with an established operational infrastructure for ETFs. And as a result, everyone kind of knows the way the workflows are supposed to take place. With the introduction of in-kind creates, which are particularly prevalent in a lot of the applications for ETFs in the United States, you introduce a totally novel operational structure for the crypto asset ETFs. Specifically, you effectively have those doing the creates sending coins, BTC, ETH, whatever else it might be, to the issuer in exchange for the shares, or on the redemption side, you're effectively sending your shares to the issuer and receiving BTC. And this concept of custody for those digital assets as part of the creation and redemption process, particularly through the APs, is a new and novel process. So we've spent a lot of time talking to those within the industry about how the operational workflow should take place and kind of where the risks are and where the efficiencies are. We're also spending a lot of time thinking about the kind of the regulatory obligations associated working with these physical assets. One thing in particular, there might be certain KYC AML requirements associated with receiving the BTC from the issuer. So, we think about how do we track, just like we would track on-chain activity for OTC trading in spot crypto, how do we do something similar for the underlying assets associated with creation redemptions on the ETF side? And I think there's a bit of a learning curve there, but it seems like the industry's coming along pretty quickly, particularly because of the way it's matured in the spot space to begin with. I think the other thing that's really fascinating is the diversity of indices that the ETFs and ETPs are using for kind of establishing the reference price. There's a lot of different indexes out there, and some of them are fairly similar, and some of them are very different in how they're computed, both in terms of the construct itself and the timing of all of it. And what we found is, in order to really participate in this market, you need to understand those underlying indices and how they're constructed. So it's important for people to pay attention to those nuanced differences as well.
Yeah, and those are great points that you brought up, Chris. So I think taking what you just said, and I think going back to Alex and Elliot, Alex, you mentioned some of the discussions with the regulators. What were some of the other issues that they've been kind of struggling with, and I guess how did they get comfortable in Canada? We'll get to the U.S. in a second, but I assume volatility and some of the other issues that Chris just mentioned were some of the things on the table as well.
Yeah, they were curious about a few different things, and by the time that we were applying for our first exchange-traded vehicle product, which was actually a closed-end fund called the Bitcoin Trust, the regulators had become quite comfortable with the underlying asset. And by the underlying asset here, I mean Bitcoin. I don't mean crypto assets writ large. Since the approval of our trust and other trusts, the regulators in Canada, the OSC, we don't have a national regulator for the US participants who may not know that, but the OSC in Ontario, sort of the standard bearer, and others generally tend to follow. The OSC has since approved ETFs for Bitcoin and for Ether. And I think that their concerns initially when the first ETF applications went in, and Elliot can probably speak to that because Evolve was one of the first, if not the first, years ago, is the underlying market sufficiently large? Is it sufficiently liquid? Is the price action, is there any evidence of market manipulation? Is there an example of mature institutional players in the market? Are there counterparties such as custodians that you can use that would meet the requirements of the regulator in Canada? And if not in Canada, do they exist in the US, and can you form a relationship with them? And in each of those different cases, I think by 2020, last year, those conditions were satisfied to the point where the regulators became comfortable with the idea of a publicly listed vehicle owning these crypto assets. And again, I'm talking specifically about Bitcoin and now Ether as well. It's not clear to me whether or not they're also comfortable with other crypto assets. Once you move beyond Bitcoin and Ether, there's no futures market, for example, for those assets. There aren't as many custody options. A lot of large market participants like Cumberland, for example, and others may not do as much in those assets as they do in the bigger ones. Chris would probably say you can make a market in anything, but but it's all of those things. And at Ninepoint, we have this thing called the Digital Asset Group, which I joined last year to form and to build out some of these different products and services. And for us, it's all about education. Now, a lot of the hard work in educating the regulators happened prior to us getting into this market in Canada. But I think that the situation as it exists in the US today is evidence that, the kind of advocacy that's happened in Canada needs to continue in other markets as well.
So Elliot, same experience with the Ontario Securities Commission, OSC, and in launching your products?
Yeah, everything Alex said certainly applies to our conversations. I think Alex is being a little bit overly modest about who's been instrumental in education in the crypto space, given his pioneering work educating the world about crypto for several years. And I think in no small part, everybody's been reading the same stuff to understand what crypto assets are. And I would say that, as Alex mentioned, we did file for a crypto ETF, a Bitcoin ETF in 2017. The regulators weren't ready at that point in time for our product to be approved. They didn't understand what they were dealing with. And a lot of the pioneering work done by the closed-end Bitcoin funds hadn't taken place yet. So when we started our conversation again with the regulators about a year ago to look at, once again, to take another run at getting an ETF approved, it was a very different conversation because there was no longer the question around, is Bitcoin an asset that is okay for investors to own? That conversation had been concluded because there were closed-end funds in the marketplace. And it was really much more about how can an ETF operate effectively to do what an ETF does, which is to grow and shrink on a daily basis based on investor demand, creating more units as more investors want the ETF, and shrinking and redeeming units when fewer investors want the ETF. And the two key places they were focused in on was price discovery, which goes to Chris's point about the different indices that are being used to value these ETFs. They wanted to make sure that we were using an index that was transparent and had an appropriate methodology so that it couldn't be gamed by somebody who perhaps was a bad actor trying to move the price of the index. Now, some of these concerns from them are based on legacy fears around cryptocurrencies that are really not relevant anymore today, but just given the history of the news cycle around cryptocurrencies, with now ancient stories of things like Silk Road and bad actors and so on, we had to, as an industry, get over a much higher hurdle than we would dealing with, almost any other currency. And you can't have the conversation with the regulators and tell them that they're, we think the question is not legitimate. You have to address the question. And so, we've all had to go out and find indices that are, that can meet that regulation. And the second part of that was the counterparty risk side of it. They wanted to make sure that an investor in any of these ETFs is not going to be buying cryptocurrencies where the counterparty to that trade is an illegitimate party. So at Evolve, we solved these challenges by using CF benchmarks as our reference rate for our products. Those are the folks who create the reference rate for the futures contract. And it was a nice tie-in, not just because they're highly regulated and fully transparent, but also because it's really all of the pieces of getting an ETF to market have come together. And as Alex mentioned, if you don't have a futures market for a cryptocurrency, it's not like we can just make an ETF out of anything. We need to make an ETF where we can deal with spot market price discovery in a reliable way, and having a futures market that is developed around a cryptocurrency, the key part of that. And so there are so many pieces that came into place when talking to the regulators that it wasn't just a matter of, showing them a few white papers and saying, here it is. We really had to establish, the asset class itself deserves to be in an investment fund format. There's a real improvement to investor experience because ETFs, through their creation and redemption mechanism, will trade very close to NAV all day long. So the closed-end premium and discount problem goes away for investors using an exchange-traded vehicle. And that the support is there in terms of liquidity in spot and futures, and we can be sure about what we're doing. These were all the conversations that we had. I was actually quite heartened by the experience in some regards, in the sense that at least we have an open dialogue with our regulators in Canada, and we can persuade them of things that maybe they start off not agreeing with, and I think that's been proven out. But it's been the efforts of many firms and many folks going through this process with the regulators, and that's got us to where we are right now. And I know there's no shortage of effort in other countries as well, but I think Canada does have a roadmap for other regulators to follow for how to get comfortable with crypto ETFs, for sure.
Yeah, so Jeff, playing off what Elliot just said and what Alex talked about their experience with the Canadian regulators, obviously a lot of the folks listening in are based here in the US. You could read some of the tea leaves potentially off what the SEC Chair Gensler has said in some recent testimony. I think I'm trying to read his quote here. There are many challenges and gaps for investor protection in crypto markets. There's been some commissioners, Commissioner Peirce and others, who have been obviously much more supportive of getting crypto ETFs going in the US. There's been some speculation that Chair Gensler wants to try to pull cryptocurrencies in general under the purview of the SEC and kind of using the crypto ETF applications for that. You have the SEC's Division of Investment Management recently giving a warning to investors about crypto market risks. So it's a little bit more complicated, to say the least, here in the US. What is, putting on or looking into the crystal ball, what do you think is going to happen in the US? What's sort of the timing? Are we going to be able to get comfortable to get some things launched here?
You're on mute.
I think you're on mute, Jeff.
Yep. Rookie mistake. Gosh, we should know by now. Yeah. So I think, ultimately it's going to come down to one word, and that one word is data. What I mean by that is, I think that, Chairman Gensler and obviously the team working for him are going to be looking at that very, very closely. You talked about kind of some of his recent speeches. Spot on. He has, pointed out a number of times that there is no federal regulator overseeing the spot crypto market for Bitcoin or ETH or any of these non-securities. He has pledged to work with Congress on this. He hasn't actually come out and said, "Oh, I want the SEC to be the one to do it." He may have learned his lesson in the sense that, at the CFTC got a lot of new responsibility for swaps markets, and then I think there were questions about whether there were enough resources to do it. And so it's not clear, is he really going for that? Is that going to be a condition to it? For purposes of reading some of these tea leaves, in addition to, looking at, his current statements, they are very consistent with, I've been going back and actually going back to school and looking at his, 2018 course that he did at MIT. And it's publicly available, except for the one where he had Jeff Sprecher and Kelly Loeffler come on. And it's actually pretty interesting. And you can tell, he's really getting into the weeds. In 1 week, somebody asks a question about a white paper. The following week, he comes back and he's sort of analyzed the white paper and does that. And throughout that time, he highlights a number of issues. He talks about custody and hacks and things like that. I kind of think, the industry has come a long way. So I really personally feel that based on everything I've heard, I think that's not going to be the gating issue. Who's doing custody, the caliber of it, the operational resiliency, the kind of the track record. I don't think custody is going to be the problem. I think his focus, and this is where the data is going to come in, and I think will be decisive, is around market integrity. Is there, can it be demonstrated, to which extent is or is not market manipulation? Even if you have, reliable, trading platforms in the US or North America or in certain markets, the fact that so many of these prices are driven from elsewhere, can he get comfortable about that? And that's not going to be around sloganeering. That's going to be really around, people looking at the data and doing a deep dive. And, a couple of years ago, one US ETF provider, Bitwise, raised concerns about the caliber and integrity of some of the data and reliability of trading. Have things moved on past there? So I think it will get a good hard look. I think it's going to be a priority. And, I think that there's a good chance that there's a good chance of movement, but, it's really going to come down to this data.
Yeah, so Chris, I don't know if you have any thoughts on, kind of the importance of getting this regulatory structure right and for the future crypto ETFs. And also, Jeff, I wanted to play off of what you said. I mean, is the data really available? Is it robust enough for the regulators, for the SEC to look at this? Because again, regulators are under a lot of pressure with some of the other issues we've seen. Market data, infrastructure in the equities markets, is not having enough to kind of prove their case.
Yeah, I'll chime in. I'll try to answer both, at least from my perspective. The importance of getting regulation right, regardless of the jurisdiction, cannot be understated. I think the cornerstone of a sound, healthy, growing financial market is clear, transparent regulations that protect the participants. So I think being methodical in the approach to approving a new asset or a new contract, regardless of what it is, ETF or otherwise, is always the right way to approach it. And the willingness of the U.S. regulators in particular to engage in active conversation, although it might happen at a timeline that doesn't necessarily meet everyone's goals, I think that willingness is important and breeds a level of confidence in me that we will get it right eventually. The importance of those regulated assets is pretty clear when you look back on the history of crypto, at least in the United States. 2017, with the introduction of futures at the CME and at the time the CBO, I guess the CFE, it opened the doors to a class of participants in the market that were previously unable to trade because maybe they had a mandate to trade a centrally regulated product on a DCM or a SEC regulated exchange. And there's been an incredible demand for it on the CME side. And we've seen really significant growth, both in terms of volume and open interest. And I imagine an approval of an ETF would do something similar. There's certainly a subset of market participants that have not entered into the crypto space because there isn't an ETF or a product with similar levels of regulation on the SEC side. And they're kind of waiting for that. So I think it's worth being methodical and patient to get this right, because when we do get it right, we've seen really positive growth in the marketplace and the usage of those contracts for those that are looking for a way to deploy into the crypto space. On the market data side, it's pretty interesting to me in that when you look at U.S. derivatives platforms like DCMs and you look at equities exchanges, there are a lot of regulations pertaining to how some of the market data might have to be disseminated or made available. But the data is kind of owned by the exchange, right? Like it's pretty difficult to access a public feed for the data on a lot of U.S.-based exchanges, and oftentimes there's a cost associated with it. And a lot of these spot crypto asset exchanges, many of which are used for these indices, if you look at the CME BRR, the underlying constituent exchanges are all these spot exchanges. The data is available on public feeds. And so there's this barrier of entry for access to market data on these exchanges that doesn't exist in crypto where it does exist elsewhere, at least for the spot side of things. So I certainly trust and understand the need for data. And I believe any decision should be based on the underlying data, but it seems the barrier of entry to access to that information, at least publicly, is much lower here. So I think there's some pros that would certainly help with the analysis going forward.
Right. So Elliot, I want to play off that a little bit and get into the next topic I want to discuss, which is how investors are utilizing crypto ETFs or digital asset ETFs. So maybe you can talk a little bit about the makeup of investors that you've seen in digital asset ETFs. I mean, if you look at ETFs in general, obviously it's not a retail investor phenomenon anymore. Institutional investors are jumping in, especially in the fixed income space, and utilizing that more. So maybe talk about the makeup of investors as well as what's the prospects for, real deep institutional investor utilization.
Yeah, it's something we've been keeping as much of an eye on as we can since we launched, because the investment market, and one of the things I think is most fascinating about crypto is, usually when you look at new developments like Silicon Valley, for example, right, you have angel investors that come first, then you have the institutions, and then the company grows up and goes public, and then you have retail investors and do-it-yourself investors. And you've had a huge amount of the growth in the value of those businesses captured by the institutions before the retail investor gets to participate. Crypto, and I'm not the first person to mention this at all, is the opposite. Crypto has been a grassroots, ground up development of a whole new asset class from the individual investor first. Now, to the best of our knowledge, and it's very difficult for us to know who's using ETFs because you don't get transparent data on the end user, but what we believe is that the majority of the people using crypto ETFs today are still that individual retail investor cohort. But we have had a huge number of meetings with very large institutions since we launched our Bitcoin and our Ether ETF. And what I found fascinating in those conversations was just how far the industry thinking has moved since we first were trying to build a Bitcoin product in 2017. When you go back to 2017, you look at the conversations we were having, the large institutions would continually say to us, I've got major career risk by talking about Bitcoin or thinking about Bitcoin. It is not something that we're looking at. And we're really not considering it. That has shifted so much that in these conversations, the message now is, I have a significant career risk if I'm not up to speed on what cryptocurrencies are. And you have messages like, we have to talk about Bitcoin because Tesla owns Bitcoin, and we all own Tesla because Tesla is in the S&P 500. So there's been a real shift towards a recognition that cryptocurrencies are legitimate, here to stay, and a required reading for anybody who is in a portfolio management or investment function within an institution. So that shift is clear. The second thing that jumped out in our conversations was just how highly educated institutional investors are. The institutional segment of the market has put an enormous amount of time and effort into getting up to speed. Generally, the thinking we were hearing from them was, we get Bitcoin, it's another way to put things into our gold bucket in our portfolio. It's digital gold. We're going to view it as the same. That makes sense to us. But interestingly, we get Ether even more so because the big institutions often have venture sleeves of their portfolios. They understand what it means to invest in venture technology, to be in those first and second rounds of fundraising for technology companies. And they see Ether being over in that category there. So they're thinking about how to use these products within their portfolios. But my feeling, and I would love to hear what the rest of the panel are seeing out there. My feeling is that the big money hasn't arrived yet. But the real institutional investment adoption of cryptocurrencies, either in direct form or through ETFs, has not arrived. But the ETFs have really changed the game, because we've now, through an ETF, solved the operational custody problem for numerous investors who otherwise were not going to go out and set up an account at Coinbase or an exchange. They just couldn't do it. They couldn't get that through their committees and their process, and they couldn't get it through all of their documentation. It's been built around the concept of kind of custodied financial assets. We've solved that. And so most of the conversations we're having start at the level of, okay, we get cryptocurrencies, we know how to use them, we know what we want to do with them. Let's talk about your operational model. Let's talk about operational risk within your particular ETF structure. How are you guys solving for liquidity if there are large inflows? How are you solving for, price transparency, tracking to your NAV through the day? How do you work with your market makers? Those are where the questions are in the conversation, which to me is just an amazing thing, because it's so different than 4 years ago, where the conversation was, you say, well, there's this thing called Bitcoin. It's invented by somebody who nobody knows who it is. And then just would kind of end there, and it didn't go any further. And all of that's gone. We're not talking about that anymore. There's now an assumption this is a real legitimate thing, and that people need to be using it.
So Alex, do you see the same comfort level increasing with institutional investors? You're on mute.
I know, I'm sorry. I've got a bit of a unique perspective on this, because Ninepoint is actually, I think, the only firm that actually converted a closed-end trust into an ETF. So we launched our Ninepoint Bitcoin Trust in January of this year, in the largest IPO of its kind in Canadian history at the time. We raised around 180 million US. And that was really because at the time we didn't think ETFs were going to get approved. And as a reflection of the pace of the change that we've seen in the Canadian marketplace, within 6 weeks, Evolve and Purpose and a few others, in fact, had gotten approved. So we took a hard look at which structure made the most sense for our investors, and we decided to move to the ETF. But the reason I'm bringing that up is because with the trust, we actually did a roadshow, and with the roadshow, we actually met with all of the people who ultimately invested into our product. So we actually, at the time, knew the distribution between retail, institutional, and high net worth. And I can tell you that you would be surprised at the number of institutional and high net worth individuals, high net worth family offices and things like that. I'm talking sort of 5 million plus type investments that we ended up seeing in the fund. And I thought, that was really interesting. And for all the reasons that Elliot mentioned, really the reason people buy these things, whether the trusts, but I think ETFs will be the dominant format moving forward, is because if you're an investment advisor and you're investing on behalf of a client, you cannot, if you're working at a bank-owned broker-dealer, you can't go buy Bitcoin and put it into their account. It's not possible. If you're an investor and you want to own this in a retirement savings plan, right? So 401k, or in Canada, they're called RSPs. You can't really do that either. And if you want to actually own this in any size, you've got to send a wire transfer to some counterparty you've never used before, even if they're a big reputable firm. Still, who's Gemini to Joe Investor in his 50s or 60s? And then you've got to buy the asset and keep it on the exchange, or take it off exchange, put it into a hardware wallet, or God knows what. All of those things are friction points. So what the ETF solves is to basically just give investors a convenient, cost-effective, and safe way to get exposure to Bitcoin that they can hold in a brokerage account, retirement savings account, and so forth. It turns out that that's something that is quite attractive to traditional retail investors. Elliot's correct that obviously, regular people are the ones who have benefited the most from some of these early crypto projects. But they're generally speaking young, tech savvy, very online individuals. The average person, with a brokerage account is not that individual. So those people are coming a bit later to this and are looking for a way to get exposure. On the institutional front, I do think in politics, there's this thing called the Overton window. It's like what's the art of the possible today? And basically, I do think for most of the past few years, the cost benefit analysis of investing in Bitcoin was was more on the cost than the benefit for individuals. Like if your Bitcoin holding went up 20x, you would get a pat on the back, but if it went down 50%, you'd get fired, right? So that's different today. I think that there is way more appetite from investors. We don't know now, to Elliot's point, what the exact composition is of the ETF, but we do know from a detailed roadshow exactly the kinds of people that do invest, and it is quite a mix. And I think that's revealing. I do also agree that we are definitely in the early innings of this. For every large institution that's invested in this, there's 20 others or 50 others that haven't. And frankly, that's very bullish in my view, because it means that you've gotten a critical mass of investors so that it's de-risked, right? There's no longer that reputational risk. You can say, well, look, Fidelity is doing it, or Ruffer, or go Guggenheim. So we're not, the first to jump off the plank. But still, there's still all those others to come. And every day there's a new data point that validates the thesis. Today was Interactive Brokers, for example, joining the ranks of other discount brokerages that are enabling Bitcoin buying and selling for their clients. So I expect the trend to continue. I do expect an increasing mix towards, more sophisticated, more institutional investors. And I think that obviously bodes well for the underlying asset as well.
So Jeff, where in your experience and talking to folks, where's the area, maybe the one or two top areas where education still needs to be had for the investor? And maybe to play it out a bit more, a lot of this comes down to other asset classes we've seen to the media's understanding and kind of reporting on a particular asset class. Where do you think maybe the media needs to be educated a bit more on crypto ETFs?
Yeah, so I think that there's, you definitely have kind of a small group of people, relatively small part of the population, some specialized parts of the kind of media that cover kind of blockchain and crypto. And, it's moving into the mainstream media. But, I think, particularly for, all of us in this conversation here today, we're all pretty immersed in it. And we sometimes underestimate how many people really don't know very much about it yet. And that's, I'm personally very involved in education, in training of regulators, training of companies, various, trainings for lawyers and accountants and lots of people, as well as investors. So I think a lot of people are. And I think that also, there can be a feeling, and I think this is very, very important. I think for some people will say, I must get this question 5 times a day. Is it too late? Did I miss it? And, this is a whole field that didn't even exist 10 years ago. And, it's not too late. So many people, individually in governments, investor, all sorts of things will need to get up to speed on this. And, I think that's something that's going to be very helpful with the regulators. Something, for example, Chairman Gensler is concerned about is, do investors have full and fair disclosure? Are there, what sort of sales practices are there? So, things like, development of codes of conduct around, sales practices and investor education, even before there may be specific requirements for these products. Obviously, in marketing an ETF, once it gets approved, there's all sorts of regulatory. So I think it really needs to be a joint effort in education. I think that's going to be very, very important in getting regulators comfortable with this, and that investors are not getting, misled or bamboozled. And it needs to be a joint effort. The industry, the regulated firms, people who are experts, and, working through the media and through other channels of training and education. But it's, really want to emphasize the message to people, if this is your first time hearing about crypto at this conference or about crypto ETFs, it's not too late. We're just getting going. I agree, with Alex's point, we're just at the tip of the iceberg, and, it does feel like we've hit, a bit of a, tipping point, to quote another Canadian, or, an inflection point where we have critical mass, but there's so much farther to go, and it's not too late to get into this space.
Ari, can I add one thing to that, which is just that in our education, and that's really what I consider myself first and foremost, is educating people, because you got to convince them about what Bitcoin is before they'll buy your product, right? We do come across a lot of critiques and concerns around Bitcoin, and one that comes up consistently is this question of the energy footprint. So as an issuer, we've tried to take steps to address that. As a firm, climate change is an issue that we care about. And one of the things that we've done actually is offset the carbon footprint of the entire, of all the Bitcoin owned by the fund, so that anybody who purchases our ETF is in effect getting access to net zero or carbon neutral Bitcoin. So there are a lot of investors who don't care about that kind of stuff, but there are a lot of investors that do. And if we're talking about institutional adoption specifically, we know that there are now trillions of dollars under management that have a specific ESG mandate. And those kinds of funds will never buy Bitcoin if they perceive it to be a polluter. There's a lot to the argument, and there's a lot of nuance to this that, we can get into. But as an issuer, we're responding to the interests and requirements of our investors. And so by doing that, our hope is that we can not only expand sort of the opportunity set of new investors, but also perhaps be a model for the industry as well. So just talking about what we're hearing from investors, that's definitely something.
Just to chime in there too, I think there's a fascinating amount of effort in the crypto space to address ESG concerns that I think people aren't quite aware of. In addition to what Alex is doing, DRW has co-founded something called Climate Vault, which the idea is to make the purchase of carbon credits through cap and trade regulated markets much easier and vaulting for those over the long term as well. And these sorts of solutions are very available and oftentimes driven by a lot of the market innovators in general. Ideas. The idea is to create a markets-driven solution to address concerns on the ESG side. So I think things like ETFs that have a carbon footprint that's flat. I think things like Climate Vault that help expedite that process as well. The innovation there is really fascinating, and I think you're going to see really impressive things out of this market over time. I can't speak for retail. We don't work with the retail investors. We don't trade with them, but we do work a lot with the institutional investors. And to the point about liquidity, the point about they know what they're doing now. They understand the assets. They're just looking for the most effective and efficient ways to deploy. What I can say on the institutional side is that the amount of appetite and the willingness to deploy significant amounts of capital in very short periods of time is fundamentally different over the course of the past year than it was, say, in 2017 and 18. And the idea that someone might come to the market and look for $100 million of liquidity in BTC at a single clip, I think maybe 5 years ago, 4 years ago, you would have said that doesn't happen. The market can't support it. But that's a pretty common occurrence these days. And I think there's a handful of liquidity providers out there that could help meet those needs. And really that just kind of comes to the education process as well. When you look at the on-exchange platforms, the liquidity might not seem like it's there given how dislocated and disjoint some of these liquidity pools are. But those firms that are working on kind of like aggregating those in some capacity, either via their ability to execute and manage the risk, i.e. the Cumberlands of the world, or ETF providers that will leverage the underlying market infrastructure to add a degree of liquidity that might not be immediately available to those looking for access to the spot investment, will just further that growth and that confidence in the market and the liquidity and the ability to deploy capital into it.
And I think just to build on, Chris, you've touched on some very important trends and recent developments, which I think will also be helpful. I'm sure we're helpful to the Canadian regulators and potentially be very helpful, which is that, if you looked at the market structure for Bitcoin and ETH and all these things, a number of years ago, it didn't really look much like the market structure in other markets that the regulators were used to. You were seeing sort of concentration of function in a single actor. So you might have the same entity doing, trading, processing, having a market making, having all those kinds of things where they're used to seeing, separation of function and mitigation of conflicts and things like that. That's something that Chair Gensler has been speaking about, for years. And, we see a lot more separation of function, separate custodians, separate transfer agents, people just doing different things and having these kind of walls and policies. So the more it sort of looks like something that the regulator is used to seeing, that they see the dynamics around kind of formation and the role of APs, start to look very familiar, then I think that gets them much more comfortable with a structure where everything is radically different.
Yeah, we only have about 10 minutes left. I want to hit on a couple other topics, but maybe Jeff and Chris playing off a little bit what you were just talking about. But, let's say we start moving, we get more crypto ETFs approved. Where do you see some of the innovations that are either needed or maybe additional players from a liquidity provider standpoint when it comes to crypto ETFs? I mean, are the trading platforms going to be the way we see it now? What do you see going forward? Maybe Chris, I don't know if you want to tackle that.
Yeah, I'd be happy to.
I'll answer that, Chris. Use of algos and the technology that's out there in trading. I mean, how do we efficiently trade a crypto ETF?
Yeah, well, I'm here to say that the market doesn't need any other liquidity providers. Cumberland can cover the spot side, and DRW's ETF arm can handle the ETF side. End of story. And give us a call. But let's actually be a little more serious about this. From a market structure, I think it's important to approach this from a market structure perspective. Anytime people ask me about what is it like to trade in the crypto space, and how do you approach it, what I've always said is it's a new and novel market, and you can't ignore the fact that there might be 140 vol days kind of thing. But if you could kind of map your thinking and your understanding of risk and how risk flows through the system and how you could kind of manage that to another market, it'll help you kind of build some signposts along the way and what you should build and how you should build it. And I often talk about, I think the crypto space is kind of a combination of the FX world and the precious metals world for various different reasons. And when you start with kind of a rooted understanding in traditional markets and apply it to crypto, it kind of gives you a roadmap of what you need to do. In particular, you start to think about how to knit together disjoint liquidity pools, some of which might be denominated in very different ways. In the United States, you have a lot of USD denominated crypto platforms, but if you look offshore, a lot of them are Tether denominated or kind of the local platforms, stablecoin. You need to think about futures and how the futures play into the price discovery process along with the spot side of things. Options as well, like the options market is slowly building up. OTC bilateral transactions that are characterized as swaps, either options or maybe CFDs or those sorts of things. Like you start to understand the various different assets you have access to for risk management purposes and use that as a way to provide yourself with a degree of confidence to provide the liquidity that the market needs. And whether or not it's in spot or ETFs or anything else for that matter, as long as you can look at them from a how do I define one in terms of the other from a risk management perspective, it starts to kind of dovetail into a fairly natural process from a liquidity providing risk management point of view. I think the introduction of algorithmic or automated strategies in this space happened probably like day one or day two of the market. I had I call it the privilege of being involved in the transition of the listed derivative space from the floors to the screens. And in that time, the introduction of automation and technology was very brand new to everyone. Right? The notion of how do we take a pit-based market and turn it into a screen-based market was novel to most of the market. And people were not only solving the strategy problem, but they're also solving the infrastructure and the operational problem. The beauty of crypto is it started in a generation in which the kind of the underlying infrastructure and operational problems had more or less been solved for automation and electronic trading. So it was a very natural step to say there's an exchange that lists these products. Let's deploy our automated strategies. And as a result, the market became very, very efficient very quickly in terms of like cross-exchange arbs. And I think you see similar evolutions in efficiency and liquidity in crypto as a result of this degree of automation. And I don't anticipate it stopping anytime soon. DeFi will represent an interesting evolution from a market structure perspective that doesn't really exist anywhere else. And we're all still waiting to see how that plays out. And maybe that leads to crypto becoming a novel or a kind of a sandbox for innovation in traditional markets as well. And I'm pretty excited to see what happens there, presuming the regulation can address concerns that might exist in DeFi.
So Elliot, any thoughts on kind of the liquidity provider community now and going forward?
Yeah, definitely. And Chris will know the liquidity space around crypto better than I ever will. But one of the things I think everybody needs to appreciate when it comes to an ETF is the ETF sits on top of all of these liquidity in the industry. And so one of the things we've always been talking about with people who use ETFs since we started our business is not to think of an ETF like a company where the liquidity you see in the market for the shares is the liquidity that you get, because in fact, it's the liquidity inside the portfolio that matters. And the reason why Bitcoin and Ether are the first two cryptos to be put into ETFs has to do with this industry that has been built over the past 4 or 5 years, where there is a futures market and there are folks like Chris who are actively making markets and providing liquidity in spot and futures. And we can just sit on top of that with our ETF. So an inflow into our ETF, if we have $1 billion of new units to be created tomorrow, it doesn't matter. We're not going to move the price around. We're not even going to trade it. Actually, the way our ETF is structured, because we use the BRR, which is used by the futures market, we just pick up the phone and do an OTC trade with folks like Chris, and we get the price because that's a reference point that the entire market has liquidity around. And so the futures market, one of the things I think is so interesting, it's a little bit of a kind of wonkish point. But the futures market in crypto, especially as it relates to ETFs, is doing exactly what the futures market is supposed to do, which is providing a repository for risk in the market such that those who transact in spot can get certainty in their price. That is super important for an ETF, because when you have inflows and outflows of an ETF, you want to make sure the amount of Bitcoin per unit doesn't move around. We intend to be 100% deployed in Bitcoin every single day, so that somebody who buys our ETF in the morning, sells it in the afternoon, or buys it on Monday and sells it on Friday is getting the return of Bitcoin during that period of time. The only way for us to do that is to make sure we trade at the price that we're valued at, in a way in which we can be sure of that price, and we don't have to send the cash we get from creates to an exchange and try to hit a NAV point. But we can do that because there are these participants, very large market makers in the market, providing this deep liquidity. So we can just go and say to that market, we need our NAV point, which in our case is the same as the futures contract, and I'll see you tomorrow with the cash. And we get that each and every time. And all of that liquidity required to keep our fund fully invested is provided by the industry. We don't have to solve for it ourselves. This is such an important point to realize when people also ask the question, well, when is there going to be, name my favorite crypto in an ETF? And the answer really is, well, if and when that particular crypto reaches that tipping point where it has support from enough market participants, there's a derivatives market to offset risk, and there's the infrastructure in place. And that may or may not happen depending on which project it is that we're talking about. But it is such an important point, because this is exactly what institutions want to hear. They want to know that they can use these products and not be moving the price around. They want to know that they can just go and buy as much as they want when they need it, and sell as much as they want when they want to move out of it, and know that the product itself is durable. And I would point out that probably the best thing for crypto ETFs, not just in Canada, but globally, anywhere that they're being considered, has been the past month of price action in crypto. We've stress tested these vehicles. There's been an enormous amount of vol. And the most fascinating thing is that there's no news, because they have performed as designed without any trouble all the way through the process. That's wonderful. That, I think, is going to bring a lot of investors off the sidelines. But that's just a statement of fact. But the amount of industry infrastructure and liquidity that supports that fact being true, that's behind the scenes, I think deserves more recognition than it'll probably ever get, because it is behind the scenes. But that's why you can call this, ready for prime time, rather than, an early stage sort of thing.
Yeah, and we only have about a minute or two left, but you actually answered the question I was going to ask you, Elliot, and a couple of questions came in from the audience. Is when are we going to see the next, or what will be the next crypto ETF? And I think it's important response that you gave. We probably should have mentioned at the very beginning, is that it's really the underlying asset which counts in an ETF in general, and a crypto ETF. So maybe I'll go down the line for the rest of the panelists. Maybe any parting thoughts on, maybe one or two takeaways for the audience. Alex?
Well, I think Elliot basically said it. This is ready for prime time. It doesn't matter what kind of investor you are, if you're retail, institutional, or other. There is a way to get exposure to this asset class through ETFs that I think will accomplish many of your objectives. The other thing that I'll point out is that the name of this panel, I believe, is Bitcoin ETFs, the Final Frontier. Don't be so sure. I think that if crypto has taught us anything, it's that this is an industry based on innovation and on creative destruction. And Chris alluded briefly to this idea, this concept called DeFi. DeFi, basically the notion that we can reinvent a lot of the ways in which financial markets and services function online using sort of native crypto assets and software. That could prove to be a new frontier that eclipses any of the work that we're doing here in the ETF space. But it's still down the road, I think, for most of the folks who are listening to the call. But if I were to sort of leave you with anything, it's that this is an incredibly dynamic sector. I think that crypto assets, are an important part of a well-diversified portfolio. And that once you, go down this rabbit hole, you'll find a whole ecosystem of innovation that is really, truly exciting. And if you're curious and you're interested in markets and how they work, there's no richer or more rewarding space to be in. So, I encourage people to just sort of jump in and learn more.
Jeff, maybe 30 seconds or less. Any thoughts?
Yeah, I think we're potentially at a great inflection point. I think Chair Gensler had the opportunity to take an unregulated market, the swaps market, and put order around that and find a structure to do it going forward. And I think he may see an opportunity to do that in crypto and rise to the challenge. It's something he's clearly very excited about. I also think we're sort of, really on the ground floor in terms of people being aware of this market. So we need to continue to educate the regulators, educate the public, educate the Hill. And I think, importantly, I think the industry needs to collaborate in those efforts because we have all of a joint interest in that, even if, many of us are competitors.
Great. And Chris, I'll give you the last word.
Yeah, I just want to say that I think the mentality of this market isn't ready. It's not developed that existed, and in some cases still exists today for certain people over the course of this past several years. Is just not a fair characterization. I think what people are looking for is the ability to subsidize their risk to a third party just so they could kind of like focus solely on their kind of investment or their portfolio goals. You have firms like Cumberland that will subsidize the risk of taking large positions on their balance sheet when you need to execute them for liquidity. We're here. You have folks like the ETF issuers that are subsidizing the risk of kind of wrapping an asset that has a lot of complex operational aspects to it in a very known structure that makes it very easy for individuals to invest in. You have increases in kind of the prime space. You have increases in the custody space. Like the development here is fascinating and happening at a blistering pace. And I think it's time for people to understand that if you are looking for a solution, it is likely out there. You just need to spend a little bit of time educating yourself and speaking to folks like all of us to help understand where you might have an opportunity that's worth approaching.
Great. Well, I know we're a couple of minutes over. Thank you to my fellow panelists, and thanks for everybody listening in.
All right. Thank you.
Bye.
Thank you. Bye-bye.